All right, we are live, and that is not what I want you guys to see. I want you to see that. All right, here we go. We're live. Welcome to the Russell Journal. My name is Russell, and this is my journal entry for Monday, October 10th, 2022. It has been an interesting day on the old stock market today. You can see behind me, we get kind of a mixed bag, a little bit of white, a little bit of not in much green, but it's also kind of all like either no change or red. You see a lot of it over there. This is our representation of the this is the index. These are the weighted ETFs that make up the S&P. These are the spider sectors that make up the S&P. So if you want to pause this and make sure you have a list of these that you know they are. And if you need to know how they're weighted, you can find, I have a picture on my Instagram. You can find it there that shows you which of these sectors, which of these things, and how they're weighted in the S&P. That matters, right? If one of these sectors is going up very strongly and the rest of them are going down, and you're trading something like SPY or the S&P 500 or the SPX, it can affect the direction of the trade, okay? So be sure to know these sectors if you're learning to trade. Maybe I'll do a video about them and talk about how they're weighted in there. This really matters. This is your market internals. That's not what I really meant to do. So going into today's video, we're talking about the idea of hopium, right? And you have this weird thing happening in the market. We didn't have a lot of economic data today, right? What we got today were basically two things. We got two Fed speakers talking, and then you've kind of got people making bets based on what they think the different economic reports coming out this week are going to do. Okay, and through my travel and sort of marking like sentiment, I've seen two sort of things on this side, right? I'm seeing really a lot of hope on the bear side to catch that capitulation move where the bulls just dump everything and the bears get rich, right? They're really looking to hit that jackpot, right? And now if you're trading again based on that, I personally never will. And to be honest with you, there's probably a more than likely chance that if that trade happens and I'm not in the right place at the right time, I will not chase capitulation. Okay. That's not a good trading behavior. It's not good. And even furthermore, like consciously, in the event that this thing loses like 5 or 10% in a single day, people I know are going to be destroyed. I hate the idea of people of getting rich off of somebody else's pain. I don't mind the market going down. I don't mind the fluctuations in the market. If you're underwater in your 401, that's kind of fine, and that kind of leads me to want to talk about like what I really want to say for today. And what I really want to talk about is that you can't trade on hopium. Okay. And you can't invest on hopium. Yeah. You've got to have some hope, but you got to do the work to figure out whether or not, like, what's the viability of your investment? How far out do you have to, what's your time horizon? When will this investment return? And is that investment worth the return, right? And a lot of what we have in the markets is people buying and selling stuff on this sort of hope type advice. I could have told you back in the summer, a Fed pivot, even if they pivoted, it wasn't going to be good. So the bull's hoping for that from like a fundamental standpoint. It doesn't work. That's not a functional reason to trade or to have a rally, right? But it was for them. So, okay. The second thing is about that though, is like, and the inverse of that is if you're hoping that the bulls are going to capitulate, you're going to get trampled. When we go into the charts today, I'm going to show you exactly how and where the bears are going to get screwed if they're not paying attention. Okay. Now I'm not saying that you won't make money, but you can't just blindly be in any market. You can't just be like, oh, things are bad, I'm just going to run in and short it, or things are good, I'm going to run and go long. I know plenty of people. I was one of plenty of people who was bullish during 2020 and lost money still, right, as a trader. So it's not really that simple. It doesn't work like that. You really have to pay attention. You really have to understand market structure. You really have to understand market pricing and where that moves and the way that those move. The idea that you just walk in and buy something and hope that in a year it's worth more money, that's absolutely stupid. And especially if you don't know, well, okay, you go in let's say you go in June and you buy some stock, some ETFs in it, right? Did you look to see where it was in January, right? If you don't know what the price range was from January to June, how can you be making any decision that that's a good idea or not, right? Same thing. It's no different than buying a car, right? I mean, if you have never bought a car and I walk up to you and say, hey, I'll sell you a car, it's $100,000, and then it's a 2004 like Camry, right? 100 grand, but it's a car for 100 grand. Cars sell for 100 grand, lots of cars, right? You wouldn't buy that. And even furthermore, you go look on the internet and be like, hey, how much should I pay for a 2004 Camry, right? That's what you would do. You wouldn't be, and why would you do any different with stocks? Why would you walk up and just be like, let me buy something, or let me short something, let me buy call, you don't know what's a fair price. You don't know what's a fair move, what's good, how any of that works, but yet people do it all the time. And then they learn a few little things, about economics, and they're like, oh, we know it all, right? And one of the big problems I've had is I've made a whole bunch of decisions in my entire life around little tiny pieces of advice that people had that had zero context to them. Okay. So it's really, it's anything you do is more involved than that. You can't just take this one, guy who did a thing and made money and just do it. It just doesn't work, right? Parts about running a YouTube channel here is at some point, I'm probably going to have to offer some type of class in order to keep doing what I'm doing, because we need to offset the time I'm investing here and not entirely in the market. And the thing is you still aren't going to be able to do what I do, right? I can tell you what I do and how I'm going to make money at it, and how as of right now, I am actually making money at it. But and that's the problem with these channels, right? Growing this channel is I need to grow followers, mostly because I need people to talk to. I need people to challenge my ideas and people to tell me what I'm doing is right or what I'm doing is wrong, and either validate the stuff that's right, invalidate the stuff that's incorrect, change my perception, help me, overcomplicate and undersimplify shit all over. That's what, So anyway, all of this being said, we're going to go in today and we're going to look at some stuff that doesn't really have a whole lot to do with the fundamentals. Okay. And we're going to talk before I'm going to give you this last little bit about fundamentals. Okay. The market doesn't crash on information it knows about. Okay. I want you to understand, it doesn't capitulate when it knows what the information is. You wake up one day and a couple of hedge funds are dumping mortgage-backed securities, and you have no idea why. That causes a market crash. You wake up one morning and the oil index is dumping contracts on oil because they can't accept, right? They can't take those orders. They can't hold that actual oil. And that causes a market crash. Okay. The thing is those are things people don't know are happening. If they knew, they would have done something to stop that from happening. The thing that will cause capitulation is when there's something we don't know about. Okay. So if you think you're going to come into an FOMC meeting and the Fed is going to be like, hey, we're going to raise those rates, and the market's just going to lose 50% that day, that's not how it works. We all know the Fed is going to do a rate hike. We all know that's coming. We all know that the CPI data is bad. It's bad. And the market is down because it's bad. And you know what that usually means? It usually means that bad is now priced in. It's been discounted into the market. So until you find the next thing that's not working, or the next thing that might break, or the next thing, right, to price in, at some point, there's going to be a bounce back in the other direction, because we already know about it, Phil. We already got it. Okay. It's there. We know. Okay. We know CPI is bad. We know that they're going to raise interest rates. We know that earnings are going to compress. And we know, right? We know that there's going to be some pain that the unemployment's going to rise. None of that means the market has to crash, right? The market crashes when somebody gets either so underwater on something, or is afraid they might get so underwater on something, on some asset, and that causes the crash. They have to dump, right? They have to capitulate. Okay. If you think that we're just going to break under 360 on SPY and it's just going to go down, and like, this kills me. I'm a big fan of Steve Van Meter, but I've been watching him for 2 weeks now, and he's like pointing how there's no volume underneath 360 on SPY. So what? There can be volume. It can come in, right? Go watch a Mike Schwartz video. He'll show you the volume profile where it moves every day. Every morning, he puts it up there. Go watch Mike Schwartz. The guy's a great trader, by the way. But like, it doesn't mean because there wasn't volume there during the 2020 thing, doesn't mean it's going to go straight down, right? And that they're not going to find reasons to buy it. And that's what the reason talking is, because when I go into the chart today, we're going to look at the 200 weekly moving average and the 200 week exponential moving average. And I'm going to show you why they're going to buy. Okay. So let's just go ahead and jump into that. Let's do the technical analysis. And you don't need Hopium, right? Let's go to SPY. Let's go right here. Let's go to the weekly. Okay, we're going to turn this noise off. I put this line here so that I could know where it is. So on the regular chart. Jeez. All right, we're going to jump into this one. All right. First of all, EMA. The 200 weekly EMA. See that? That's it right there. That dotted line. This dotted line, this is 200-week EMA. This is a 4-year moving average. There is a handful of times that the market has touched that average. And every single one of them has paid massively if you bought there. Do you think the smart money? I know about this line, and I'm not smart. You think the smart guys know about this line? You think they've seen it? Right? Now, check this out. We'll make this chart go all the way across the thing. That's when oil collapsed. Do you think it was a smart idea to buy at or underneath this line? Do you think it was really stupid? Was not. I mean, this is weeks. So 1, 2, barely 3 weeks down there. You had 3 weeks and you could have made all that money, right? This is hands down and just really rarely one of the best times. This is a unique opportunity to ever buy. Is when you get to that line. I will show you some more. You don't believe me? Oh, look, there's another one. Look, got real close to it. Huh. And then look, this one barely got below that one. Real good time to buy, right? If you ever wanted to load the boat, right? Look at that. Got close, got close. That one kind of, but didn't really. You see what I'm saying? We can just keep going back in line. I mean, it's almost gotten there twice, 4 times. This is like 10 years worth of freaking stuff. 4 times in 10 years you've ever had a chance to buy at these levels. On sale, 1 week only. Look. You really think they're not going to buy this? You really want to go short at that line. That's your smart idea. You're a genius, Gump. Okay. Be careful shorting around that line. You know, the bulls don't even need a reason, man. Okay. They don't even need a reason. Now, here's where things get really sketchy, though. Okay. Going back to where this is this week. This candle is this week. See that line? That's the 21. This is the 200. If this line gets underneath, you got a problem. Okay? Now, if you're shorting this and the bulls, right, if you're shorting this here, again, you're going to have trouble. There's a handful of times where investors could have bought at that line, and every single time it has worked out. So this week, the next couple weeks around this line is going to be really dangerous. Like I said, this one gets underneath it, we got a different story. But as of right now, and I will tell you, even if it comes down here, here's what they'll do. They'll drag this 21 into this 200, and about the time they touch, they'll send that thing sky high. This is a pretty crazy bear trap. If this plays out, if this comes into here and everything starts to turn back up, watch out. This will be probably one of the most epic moves you've ever seen. Have price break below, drag the 21 to here, have those two lines touch, and oh yeah. Don't think people with big money and know how markets work aren't paying attention to that. Okay. The other thing to look out for. Okay. You got the EMA and you got the MA, which is basically your simple moving average. Here's the other one that's right below. It's right below the 200 EMA. This one, the weekly moving average. And again, I'm going to show you on the chart where it's the same thing. You've got like maybe 10 times since the 80s that you've ever had a chance to buy at that line. Don't think they won't be buying. Don't think there won't be support. Okay? All right. That's enough of that. You're hoping for capitulation sitting on top of the 200 EMA, you freaking morons. All right. Getting into the daily chart. All right. Let's turn on our normal stuff. Bollinger Bands and the MA. All right. Oh, golly. Here we go. What's our normal routine? Trend. Up. Higher highs, higher lows. That's a higher high. That's a higher low. I told you guys yesterday, I thought it hit that line. I thought that they would sell puts, not VIX puts. They would sell S&P puts, and they'll try and drive this back down into the 18. That's what I said. Now, this isn't something, I'm not smart. Ira Epstein's the guy who taught me they would do that. And again, this is another reason why we know that we're not getting capitulation. See how that candle's red right there against that off of that Bollinger Band? It got up there, hit it, and then pulled back immediately. Okay. Here's the thing: is in the event that things were really, really bad, this and it still could do it. It still could do it. This red candle right here, and this right here, it should be pushing a lot. If they're really scared, they'd be pushing against this upper Bollinger Band. They'd be buying up everything they could get on this upper Bollinger Band, thinking that it's going to really capitulate. It's going to crash. But if you look, that bad baby's a red candle, right? Go over to SPY. What do you got on SPY? You got a red candle on SPY. Usually that means a rally's coming in stocks. Right? SPY put in a red candle. This put in a red candle. Where we close? 32.45. Yeah, it's just fiddle farting around. It's just in this little range right here. So I'd be careful. All these VIX, all these stock market bears, they're fixing to get trampled. Okay. So going through our whole thing on the VIX, trend is up, bias is up, momentum turned up. They turned it up, got all turned up. Okay. Again, you're running out of stuff to be afraid of, though, because we know the stuff we know about's what, right? If there's something happening that we don't know about, we know the credit market's screwed. We know the bond market's screwed. We know these things are screwed. That doesn't mean they're going anywhere, or that they're worthless, or that people are just running for the hills, right? So when we find something we don't know, then we'll have a reason. Okay. DXY. Now, this is a good reason to listen. If there's anything to listen, Steve Van Meter teach you a lot. He'll teach you how the bond market works. He'll teach you how the money system works. He teaches you a lot of stuff. I recommend educational videos. You got to make up your own mind as far as like some of his products. I can't speak to that. He's got a guy, Jeff Snyder, with the dollar milkshake theory. He does a thing, and they're really predicting this thing to go to the moon. They're talking about the dollar, just there being a dollar shortage. I, again, don't know much about it. I don't really focus a lot on currencies in general. But I do know that usually if the dollar is up and the dollar is really up, stocks will typically be down. Not entirely. It's not an exact split, but a strong dollar usually makes for a weaker stock market, especially when the dollar's got to outpace something like inflation, which is funny because that's like basically that means the dollar was worth $1.13, I think, and inflation at worst was was 9%. So you're losing 9 cents. Buying DXY, you're actually beating inflation. It looks like. I don't know if that's true. Okay, back to this dollar DXY. Okay, here we go. DXY. So lower low, lower high. We're in trouble. Momentum is up. Bias is up, right? So you get this weird thing where it gave you this lower low, and now it's got a lower high at the moment. We'll see where it goes in the next couple of days. Could give you a higher high. It is sort of trending. If you really look at it, you got higher high, right? Or higher low, higher low, higher high right here. So this has still got a chance to put in another higher high up there somewhere. So if it keeps going, yeah, I mean, it could mean that stocks will be under some pressure. But again, stocks are really they're gonna fire back here. They got to. What else do we got? Okay, so VIX SPY. Go through SPY. All right. Nice, it's up in the after. Okay. So trend is down. Bias is down. Momentum is down, right? All of this stuff basically tells us we're short. We're looking to short. Good spots to short from are usually the 18-day moving average. targeting this lower Bollinger Band. This lower Bollinger Band is going to start closing in, though, pretty soon. It's already starting to turn up. This one, this upper one, is coming down, turning down. So it's gonna narrow that range out. So I would not expect. I would definitely expect to see this whip around in here, find support along this 360 line. That's kind of what I'm expecting. Again, if you're shorting this, thinking it's just going to break below those 200s and just keep going, I think you got another thing coming. There's a couple things about this that are really interesting. One, I really don't think that I really don't think that this is going to be I don't think the bottom is in exactly, right? Like I think if you looking to see down there around 340, maybe even the 330s. So I do expect to see us kind of go down there. Like I said, I would imagine they're going to bring that 21 right into that 200, and just before they cross over, they're just going to hammer it back to the other direction. That's a pretty classic trap move that I've learned over the last few years, and that would be a big one because that's on the weekly. That's a weekly thing. So even if they let it come under, they might even scoop it back up. Typically, when they cross, when a faster moving average crosses underneath a slower moving one. This is, they call it a death cross. When that happens, though, right, typically what you actually see is a lot of buyers, the buy the dip crowd, at the day they cross, the buy the dip crowd will typically show up that day. And so it's funny because you'll get that bear cross, but you'll usually get a bull, at least a green day off of it, because it's a pretty good indicator. When that happens, especially on weeks and days, there's a pretty good spot where it's really gotten cheap, right? Is where the sentiment has gotten bad. So, you never know, Anyway, but like I said, I think you're going to put in a bit of a trade bottom along here with that 200 EMA, catch some bounces off of it. It's probably really good if you're an investor. That's probably great. You can just hang out down here and load up your position, average down really good. If you're a trader, swing trader, it's not going to be a lot of fun for you. If you're a scalper, it'll be your paradise. This will become a scalper's paradise for the next couple weeks through here. We do have earnings season really kicking off. We have CPI data. We've got jobs data. We've got retail sales and all that stuff coming up. So we'll be covering all that stuff. So make sure you check out tomorrow's video. If you haven't already, like the video. Give us a like. I need likes. I need you to like me because I'm insecure and because that algorithm is a jerk. And I need to get the algorithm to get the channel to grow so that I can help people. Because honestly, right down here is a pretty good buying opportunity. Like my generation is this is a once in a generation sort of thing. Well, we're going to get it twice, right? Like really maybe 3 times in our generation where you can load up here, where you can, over the course of the next 10 years, you can make some, you can change life with it. So maybe I'll do a video all about that tomorrow. Anyway, as far as all that goes, like I said, subscribe. We'll talk more about this stuff tomorrow and what's going to happen, and we'll see what happens. In the meantime, just thanks for watching. I am Russell. The Therusseljournal is written, edited, and presented by Solis. We are produced with social media shows. Our executive producer is Maria Pereza. Give her a check out social media shows on Facebook and all the other major platforms. Make sure to like and subscribe on your way out. And in the meantime, just pretend I said some sort of catchphrase.